If you could purchase an insurance contract and get a guarantee in writing that if you never tapped into the coverage while you're alive and you could get 100% of your money back, would you be interested? Well, in this video, I'll be sharing with you a strategy on how you can get critical illness coverage for free. My name is John Moakler, and I'm the founder of Moakler Wealth Management. And for the best advice on how to protect you and your family, subscribe to my YouTube channel and hit the notification bell so you'll be notified when we launch a new video. In Canada, only 5% of Canadians actually have critical illness coverage. However, 85% of Canadians have admitted they are worried about actually getting a critical illness. And 58% of Canadians have said they would be in financial difficulty if they contracted a critical illness. Now, what if I told you there was a better way to get critical illness coverage and it involved using your corporation for part of this strategy? So what I'm referring to is something called a shared ownership critical illness policy. So part of the premiums, the actual coverage of the critical illness, would be paid for by the corporation with corporate dollars, and then you personally would be paying for the return of premium on death feature and the return of premium on surrender feature. So here's how it kind of works. The bulk of the coverage, or 60% of the costs, would be paid for with corporate dollars. So you're only using 11 or 12 cent dollars. And the other 40% of the premium would be paid for with personal after-tax dollars. If you contracted one of the 25 plus critical illnesses listed in the coverage, then you would immediately tap into the benefit of the critical illness policy. If, however, you remained healthy and you didn't tap into the policy and the return of premium surrender clause kicks in and you're in control of that, you can decide if you want to actually trigger that clause, you can get 100% of the money back, both what the corporation put into it and what you put into it personally, but you would get it all back personally on a tax-free basis. Let's look at a case study. Let's assume you're age 42 and that you are a successful incorporated business owner and that you need at least $350,000 of critical illness coverage. Well, in this example, the corporation would be paying for the pure critical illness benefit, or it works out to, out of the $6,100 annual premium, $3,700 of that would be paid for with the corporation, and the remaining $2,400 would be paid for personally. So now, after 15 plus years, you're in control. You can decide to continue paying the annual premiums, or you can trigger the clause of return of premium and surrender and ask for 100% of your money back. So back to our example. If it's 15 years into the future, our 42-year-old is now age 57. So you can decide if you want to continue making the premium payments, or you can decide to actually kick in the return of premium surrender. And in our example, you would get the $6,100 back tax-free personally. So that would be a bucket of $91,500 tax-free. So you can see why this is a great strategy to give you critical illness coverage while you need it. But then when you decide you don't need it anymore, it's a great way for getting money out of the corporation on a tax-free basis. So we design guaranteed critical illness policies. And what I mean by that is either you're going to get a critical illness and the policy will pay out the benefit, or if you don't get a critical illness, you can have 100% of your money back on a tax-free basis. So who benefits from a critical illness shared ownership policy? Well, the corporation benefits because you as a shareholder, if you do come down with a critical illness, it gives you that liquidity to deal with the critical illness as a shareholder. And you personally, if you don't come down with a critical illness, then it's a way of getting money out of the corporation on a tax-free basis. And so it depends on when you decide to implement the return of premium surrender. Most clients decide to keep it in place during their working years. But once they decide to sell the corporation or retire, that's usually when they trigger the return of premium surrender and get a lump sum of money that they can then use in retirement. If you'd like to learn more about how you can implement a shared ownership critical illness policy in your financial and retirement plan, click on one of the links below to apply to become my client. And if you like this video, give it a thumbs up, subscribe to my channel, and share it with a friend. Thanks for watching. And always remember, when we design financial plans for our clients, we always make sure that their money outlives them in retirement.